Hello, for this session, our topic will be partnership dissolution. So we're already done discussing about your partnership formation and your partnership operation. So we said before in the stages on the life of a partnership, we have your partnership formation in which the partnership is formed or partnership is brought into life. And then have your partnership operation wherein the partnership now starts as business. We have your different operations already of the business. The partnership either earns or has some losses. Now we have your partnership dissolution. So what is a partnership dissolution? A partnership solution is the change as to the interest of your partnership, particularly because of change in ownership. So normally, a partnership dissolution is defined as a change in ownership. So what do we mean by this change in ownership? So in this change of ownership or change in ownership, we mean that from your partners, we have either an additional partner or a removal or an outgoing partner. So, okay. So, in your partnership dissolution, in your change in ownership from your partners, you have either an additional partner or an outgoing partner. Therefore, for this session, what are the topics? First, of course, we need to learn how to account for partnership dissolution, particularly for your additional partners. We call this one your uh, admission of a partner. And then we have your outgoing or your removal. So what do we call this type of partnership dissolution? We have your debt withdrawal or retirement of a partner. Okay, so for today's meeting, we talk about first the accounting for your admission of a partner, and then we go with your debt withdrawal or retirement of a partner. So for this whole session, our topic will only revolve around these items. So we account for your partnership dissolution. So let's start. So we said a while back that your partnership dissolution is a change in ownership. So it's either an addition or an outgoing type of change in ownership. So this should not be confused with your partnership liquidation. We said before in your introduction that if ever it is only dissolution, change on ownership or of ownership. While if that is a liquidation, it is a termination of the business. So there is a difference. You can change in ownership, however, there's no debt of the partnership. But if in case it is liquidation, it is already the debt of a partnership, we need to terminate the business. So again, in your dissolution, it does not necessarily mean that you liquidate the partnership or you terminate the partnership. There was only a change in ownership. However, in liquidation, there is no other means but to terminate the partnership. Okay? So under dissolution, take note, there is no termination of partnership business, meaning the partnership business will not end. What happens here only? The partnership business continues. However, there is a different ownership. While in your liquidation, there is a termination of partnership business. Meaning, partnership business does not continue. Meaning, partnership business does not continue. Okay, so what are the different steps to account for a partnership dissolution? So the following are the steps to account for a partnership dissolution. First, what we do is to adjust the accounts, particularly the partnership capital. Also, we need to look for any accounts such as your assets that is either overvalued or undervalued. Next, we allocate the income or loss for the period. And then lastly, we account for the type of dissolution. So take note of this, guys. It doesn't mean that if you dissolve the partnership, you will only account for the partnership dissolution. So we follow these steps. First, we adjust the accounts. So when we say we adjust the accounts, we look into your items of assets that is either overvalued or undervalued to your capital. So meaning, if your asset is overvalued, you need to decrease it, therefore your capital will decrease. Now, if your asset is undervalued, you need to increase it, then your capital will also increase. So again, you need to adjust the accounts. What is the effect? It will affect the capital. So what accounts normally are adjusted? It is your asset. It is your asset. So if your asset is overvalued, you need to decrease it. So the resulting effect is you need to decrease your capital. If the asset is undervalued, you need to increase it. Therefore, the resulting effect is it will increase your capital. After adjusting your accounts for your any undervaluation or overvaluation of your assets, we go now by allocating the income or loss for the period. So let's say, guys, that you dissolve from you dissolve on August 1, 2020. So you have operated from January 1 to August 1. Whatever is the profit or loss for that period prior the dissolution. So what is only allocated? The income or the loss prior the dissolution. So whatever is the income or the loss prior the dissolution from January 1 to August 1, 2020, then we will account for that by distributing it to your partners. And then after that, we account for the type of dissolution. So what is the use of your number 1 and 2? To get the capital balance of the partner. So we need to get for the capital balance of the partner, and this is already the adjusted capital balance. So it is adjusted on what items? First, you adjust it to your any overvaluation or undervaluation. Then next, we adjust it on your any income or loss for the period. Okay? Since we already know the general steps in accounting for your partnership dissolution, we go now and look into your different types of your dissolution. So what are the types of your dissolution again? We have two. It's either an addition or a decrease or removal. So it's either an increase in partners or a decrease in your partners. So what are the types of dissolution under increase? We only have your admission of a partner. Decrease or removal, we have three. We have first your retirement, we have your death, and we have your withdrawal. Okay, So what is retirement? Retirement happens if ever you reach a particular age and then you decide to retire out of the business. That if ever one of the partners died, withdrawal if one of the partners withdrew on the partnership business. This type of withdrawal is a permanent withdrawal, meaning you disassociate yourself already to the partnership business. So one partner disassociates himself to the partnership business. So aalis na talaga siya. That is withdrawal. So take note, whether it is retirement debt or withdrawal, we account the same way. For your admission of a partner, we account for the same way. Okay? So you start first with your admission of a partner. Okay. So in an admission of a new partner is added to the partnership. So for example, we have partnerships A, B, and C. You add X. You add X. So this plus X is known as your admission. Okay. So this admission, we have two types. We have admission between the new partner and the partnership, or it is between the new partner and the old partners. Normally we call this one between the partners. Okay, so in admission of a partner, we have two types. It's either between the new partner and the partnership. So it is a transaction between a partner and the partnership. And then we also have your between the new partner and the old partner. So we need to look into here your transaction between now your new partner together with ABC only. If ever that is a transaction between the new partner and the partnership, it is transaction X to the partnership. So what is the difference? This one is a direct transaction to the partnership. This is a direct transaction to a partner. Okay. So if ever that is a transaction between a partner and the partnership, what happens here is there will be an investment by the partner to the partnership. While if that is between the new partner and the old partner or partners, this is a purchase of old partner interest. Look at the difference. This one is an investment, meaning the total capital will increase because there's a new investment. So it is considered as a new investment. Here, purchase of old partner interest, there is no new investment. So there is no new investment. It is only considered as a transfer of capital. Okay? While here, it is treated as an increase in capital. So what happens here? You debit the investment. So you debit the investment. It's either cash or property. Okay. And then you credit the new partner capital. So as you can see, because of the new partner capital, there will be an increase in capital. However, if that is between the new partner and the old partner or partners, or between the partners, there will only be a transfer of capital. So what happens here is a debit to old partner capital and a credit to the new partner capital. Okay, so in your transaction between the partners, look, there is only a transfer of capital from your old partner to your new partner. While in your between the partner and the partnership, there will be an increase in capital by increasing your investment. And then we have a new partner capital. So let's start first in accounting for your transaction between partners. Transaction between partners. So how do we account for your transactions between partners? So we call this one purchase of interest. We call this one purchase of interest. So this is considered a personal transaction between the new partner and the old partner. So there will be no increase again on your partnership assets because it will only be considered as a transfer of capital. So we will only transfer from one partner to another partner. So for example, A, B, and C has a capital balance of 100,000, 200,000, and 300,000 respectively. A, B, and C has a capital balance of 100,000, 200,000, 300,000 respectively. X is to be admitted by purchasing 50% of C's capital for 180,000. Okay. So since this is a transaction of your partners, meaning from old partner to new partner, just get for the capital to be purchased multiplied by your interest purchase. Okay? So first, we need to get for the capital to be purchased. So we will purchase C's capital. So what is C's capital? So andito si C, capital of 300,000. Okay, so C's capital 300,000 multiplied by the interest purchase. So what is the interest purchase? 50%. So this will give us 150,000. So this will only be accounted as a transfer of capital. So C capital, tanggalin natin, 150,000 and credit to X capital, 150,000. Okay. Look guys that the transaction price is ignored. Diba? Yung 180,000, it is ignored. So why is it ignored? The 180,000 is ignored because again, this will only be treated as a transfer of capital. Therefore, there should be no increase or decrease in your total capital. Meaning, guys, what we do is we really ignore the amount of the purchase because that is a transaction between the partners. It will not be accounted under the books. What will be accounted under the books only is the transfer of capital from one partner to another partner. So here, we will only transfer the 50% from C to X. But whatever is the gains or losses between C and X, it will not be accounted because it is transaction between the partners. It is only between the partners. Therefore, any gain or loss is not accounted in the books. Okay, so that's one example. We're in X purchase from C. How about if A, B, and C has a capital balance of 100,000, 200,000, and 300,000 respectively, X is to purchase B and 50% of C's interest for 900,000. ABC has a capital balance of 100,000, 200,000, and 300,000 respectively. X is to purchase B and 50% of C's interest for 900,000. So we will purchase B and C. So what is the capital interest of B and C? So B and C, that is 200 and 300. And what is the percentage that is purchased? So you only purchase 50% of C and you purchase all of B's interest. So 100%. So 200,000 times 100%, 200,000. 300,000 times 50%, 150,000. So this is the amount to be placed to your new partner. So what do? We just remove the capital, or we transfer the capital. B capital 200,000, and then we have here C capital 150,000, and then we place that to X capital amounting to 350,000. So take note again, we will only transfer capital, and whatever is the transaction price, this is ignored. Okay, so again, here we will only transfer capital. Whatever is the purchase capital, we transfer it, and then we record it. Transaction price is ignored. Transaction price is ignored. We go now to your admission of a new partner by investment. So this is a transaction between partner and partnership. So what do we call this one? It is an admission by investment. So admission by investment. How about the other one a while back? It is admission by purchase of interest. Admission by purchase of interest. This one is admission by investment. So again, if this is an admission by investment, it is a transaction between the partner and the partnership. So in this case, the investment is treated as an increase in your asset with a resulting increase in your capital because of the investment. So how do we measure the investment? So remember the measurement of your investment in your partnership formation. So for your cash, it is measured at face value or face amount. For your non-cash asset, it is based on your agreed value. If no agreed value, you use your fair value. And for your liabilities, whatever is the fair value of the liability in case, or again, your agreed value. But take note, for your liabilities, it must be assumed by the partnership. It must be assumed by the partnership. Okay? So it is considered assumed if the problem is silent. And normally, it is not assumed if it is expressly stated. Okay? So there are two instances in your admission by investment. There are two instances in your admission by investment. And what are those two instances? The first instance is that the partnership contribution or the partner investment is equal to partnership or partner agreed capital. So contributed capital is equal to agreed capital. Another instance is that the partner investment is not equal to your partner agreed capital. So contributed capital is not equal to agreed capital. I know you already know about this, as we have discussed this one in your uh, partnership formation regarding contributed and agreed. So contributed is the amount of the capital that was provided by the partner, while agreed capital is the amount of capital provided by the partnership to the partner. So magkaiba sila. Contributed, binigay yan ni partner. Yan yung amount ng actual contribution. Agreed capital, yan yung mailalagay kay partner as per the agreement of the partnership. As per the agreement of the partnership. So let's start now with your first instance wherein your contributed capital is equal to your agreed capital. Is if your contributed capital is equal to your agreed capital, no problem here, no problem. Why do we mean no problem? Because what we do here is we just account for your investment. Right? We account for your investment. But here in your partnership investment is not equal to your partner agreed capital, or contributed capital is not equal to your agreed capital. We have here either your total contributed capital is equal to your total agreed capital, or your total contributed capital is not equal to your total agreed capital. If your total contributed capital is equal to your total agreed capital, we have here a bonus. We have here a bonus. So this will only be considered as a transfer of capital from one partner to another partner, plus we account for investment. While if ever that is total contributed capital is not equal to your total agreed capital, we have here your goodwill. So a goodwill is recorded if in case the total contributed capital is greater than your total agreed capital. Total contributed capital is lesser than your total agreed capital. So why do we mean goodwill? Because again, there is an excess. This is only the amount you contributed, and this is the amount of agreed capital. Next, we have your total contributed capital is greater to your total agreed capital. This happens if in case there must be an additional withdrawal by the partners. Okay, so again, there are two instances. First, we have here, your contributed capital is equal to your agreed capital. Sabi natin, we don't have any problem here. We will just account for the investment. Next, what if your contributed capital is not equal to your agreed capital? So it's either bonus, or in there will be a transfer of capital from one partner to another partner, and then we account for the investment. What if the total contributed capital is not equal to your total agreed capital? There will be a goodwill if ever the total contributed capital is less than the total agreed capital. And then there will be an additional withdrawal if ever the total contributed capital is greater than your total agreed capital. Okay? So let's have some examples pertaining to this one. A, B, and C are partners. A, B, and C are partners with capital balance of 100,000, 200,000, and 300,000 respectively. X is to be admitted to the partnership by investing 100,000 cash and inventory with fair value of 50,000 pesos. So A, B, and C are partners with capital balance of 100,000, 200,000, and 300,000 respectively. X is to be admitted to the partnership by investing 100,000 cash and inventory with fair value of 50,000 pesos. Okay. So case number one. Case number one. So we have here your contributed capital is equal to your agreed capital. Contributed capital is equal to your agreed capital. So meaning X will be given a value of 150,000. So how do we treat this one? You treat it as purely an investment. So we just record the investment. So we debit cash 100,000 and then we debit inventory 50,000 and then we credit X capital 150,000. Okay, so we have here B, we have A, B, C, and X. So A, B, C, X total. So we have here your agreed capital and we have your contributed capital. So AB, we have 100, 200, and 300. For X 150, this is 750,000. This is 750,000. Okay? And then we have your agreed capital. Sabi natin equal dapat. So this is still 100, 200, 300, and 150,000. So 750,000. Okay? So walang problema dito because the contributed capital is equal to your agreed capital. Now what if your contributed capital is different from your agreed capital? So A, B, and C are partners with capital balance of 100, 200, and 300,000 respectively. X is to be admitted to the partnership by investing 100,000 cash and inventory with fair value of 50,000 pesos. A, B, and C shares profit or loss of 20%, 30%, and 50% respectively. Case 2, X is credited for 25% of the total capital. Okay? A, B, and C are partners with capital balance of 100,000, 200,000, and 300,000 respectively. X is to be admitted to the partnership by investing 100,000 cash and inventory with fair value of 50,000. A, B, and C shares profit or loss of 20%, 30%, and 50% respectively. X is credited for 25% of total capital. So ang gagawin natin dito, we compute first for the agreed capital and contributed capital. So we have here A, B, and C. So for A, we have here contributed of 100, for B, 200, for C, 300, and for X, we have computed that already. 100 plus 50 is 150,000 pesos. 100 plus 50 is 150,000 pesos. So total of 750,000. Okay? Now, sabi dito, yung agreed capital daw ni X ay 25% of the total capital. So we get it 750,000 multiplied by 25%. We have here 187,500. So how did we get this one? Total capital multiplied by 25%, 187,500. So we have here 37,500. This is a bonus to X. This is a bonus to X. So, how do we account for your bonus? Sabi kasi natin kanina, di ba? If ever that is bonus, what do we do? we account for investment plus we account for bonus. Okay, so how do we account for your investment? So just record the investment. So how do we record the investment? We debit cash, 100,000. We debit inventory, 50,000. And then we credit X capital, 150,000. How do we account for your bonus? So you record the bonus, and bonus is shared by the old partners using their profit or loss ratio. Okay, so take note of this, guys. If ever there is a bonus, it will only be a bonus to either the admitted partner, or the retiring, withdrawing, or uh, who died, the one partner who died, they will receive the bonus. So sila lang makaka-receive ng bonus, or sila yung mababawasan ng bonus. So dito, it is a bonus too. So we need to increase X capital. By what amount? 37,500. And how do we share the 37,500? The 37,500 is shared by the old partners using their profit or loss ratio. So who are the old partners? A, B, and C. And what are the what is the profit or loss ratio of the three partners? So A has 20%, B has 30%, and C has 50%. So you get the values. So 37,500. Get the 20% for A, so 7,500. And then we have your 37,500 again. Get the 30% for B, we have 11,250. And then we have 37,500. Leave the 50% or get the 50% from C, 18,750. So here, there is a bonus to the new partner. So this is treated as a bonus to new partner. It is treated as a bonus to new partner. How about if it is a bonus to all partners? How about if it is a bonus to all partners? So let's have an example. Case 3. So here, the same problem. However, we will give a lower amount to your new partner. So X will only be credited 15% of the total capital. Okay, so 15% lang. So we have here agreed capital and contributed capital. What is the contributed capital of X? 150,000. So agreed capital, what is the total capital again? We have computed it as 750,000. Diba? This is equal to 100 plus 200 plus 300 plus 150. So 750,000. And what is the amount of capital credit? 15%. So 750,000 times 15% will give us 112,500. So this will be a negative. So this is a bonus from X. So 112,500 less 150,000, we have again 37,500. We have a 37,500 bonus from. So how do we account for this? We account for the investment. So we debit cash, we debit inventory, and then we have here X capital. So how much cash? We have 100 in inventory, 50,000, X capital, 150,000. And we account for the bonus. So this is a bonus from new partner. It is a bonus from new partner. If that is a bonus from new partner, we need to decrease the new partner's capital. If that is a bonus from new partner, we need to decrease the new partner's capital. So we decrease X capital by the amount of bonus, 37,500. So ito. And then Dadagdagan naman na natin yung capital nila kasi it is a bonus from. So, pag bonus from, galing naman kay new partner papunta dun sa old partners. So, magkano yung bibigay natin kay A? So, 37,500 multiplied by 20% kasi 20% si A, 30% si B, 50% si C. So, 37,500 times 20%, 7,500. And then 37,500 times 50%, 18,750. And then 37,500 times 50%, we have 18. Okay. 37,500 times 30% is 11,250. And yung 50% is 18,750. Ayan. Ayan. Okay. So, look at the difference. A while back, it is a bonus to. Now, it is a bonus from. Take note, who will only share the bonus. So, the bonus is either to or from the new partner. And then, all partners will only share the bonus using their old profit or loss ratio. Using their old profit or loss ratio. Okay? So that's what we do here in your uh, bonus to your new or bonus to new partner or bonus from new partner. And sometimes you are asked, what is the capital after the admission? Okay, so we have here A, B, C, and we also have your X. So we have here your agreed, we have here your contributed capital. A is 100, B is 200, C is 300, and X is 150. And then we account for your bonus. So how did we account for your bonus? Binawasan natin si X. And then dinagdagan natin si A, si B, at saka si C. So what is the adjusted capital already? So for A, 107,500. For B, 211,250. For C, 318,750. And for X, you have 112,500. So in case, guys, you were asked, what is the capital of A after the admission? Your answer is 107,500. What is the capital of C after admission? 318,750. That is because of the bonus. That is because of the bonus. So in case, guys, you're asked, what is the capital after the admission? We have here contributed capital and then bonus. Take note, bonus here kasi is bonus from. So binawasan natin si X, tapos dinagdagan natin to. Pagka bonus to yan, dagdag naman kay X, tapos bawas, bawas, bawas. Ganun siya. Okay? So mag-ingat kayo regarding the bonus. Okay. So how about if ever your total contributed capital is not equal to your total agreed capital? Because again, we have here your case 1. We have your contributed capital is equal to your agreed capital. Case 2 and case 3, we have here your contributed capital is not equal to your agreed capital. However, this is under bonus. Now, what if your total contributed capital is not equal to your total agreed capital? What if? So how do we account for that? So let's just copy this example and we go with your case 4. Okay. So let's say X will be credited the same amount representing 25 or representing 30% or the 25% of the total partnership capital. No bonus to be recorded. So no bonus to be recorded. So X will be credited the same amount representing 25% of the total partnership capital. No bonus to be recorded. So dito kasi, ibig sabihin, yung total, dito, yung contributed capital is equal to 25% of total partnership capital. So we compute for your total partnership capital. So first, we have your contributed capital of the new partner. And then we need to divide it. We will divide it to the interest given. It is here, it represents 25% of the total partnership capital. So we divide it to 25%. So the capital contribution of the new partner is equal to 100,000 cash plus 50,000 inventory. So we have here 150,000. We divide it to the interest of 25%. So 150,000 divided by 25% is equal to 600,000. 600,000. So we have here now your new, or this is your total partnership capital. This is your total partnership capital. Therefore, we compare this total partnership capital to your total contributed capital. So we have here A, B, C, and X. For A, we have 100,000. For B, 200,000. For C, 300,000. And for X, 150. So what is your total contributed capital? 750,000. But what is the total agreed capital as computed under your total partnership capital? 600,000. So when you compare total contributed capital is greater than your total agreed capital. So what happens again if your total contributed capital is greater than your total agreed capital? The old partners should withdraw. Should withdraw the excess. Okay? Should withdraw the excess. So here, the other partners should withdraw the excess of 150,000 because this is 750 and this is 600,000. So the difference is 150,000. You need to withdraw. Okay? So we withdraw the 150,000. So how do we withdraw that? We withdraw using the partnership, profit or loss. So first we account for the investment. So cash, inventory, and then X capital. So we have here 100,000 cash, and then the inventory of 50,000, 150,000. And then we account for the withdrawal. So how do we account for the withdrawal? We account for the withdrawal as a decrease on the capital of the partners using their profit or loss. So we have here A, B, and C. And then credit cash. How much is the amount? 150. That is the amount of withdrawal because that is the difference between the total contributed capital and total agreed capital. And then we will share 20, 30, and 50% because that's their profit or loss ratio. So 150,000 times 20% is 30,000. 150,000 times 30% is 45,000. And this is 75,000. Okay? So again, if ever your total contributed capital is greater than your total agreed capital, then we need to account for it as a withdrawal. As a withdrawal. Okay. Now, what if guys, your total agreed capital is greater than your total contributed capital. So we have here case 5. So A, B, and C are partners with capital balance of 100, 200, and 300,000 respectively. X is to be admitted to the partnership by investing 100,000 cash and inventory with fair value of 50,000. A, B, and C shares profit or loss of 20%, 30%, and 50% respectively. X will be credited the amount of investment which represents 15% of the total capital. Okay. So dito naman, it is already 15% of total capital. So we compute for the contributed capital of X. We have 150,000. We divide it to the interest to be credited to X, 15%. So what is the total capital? We have 150,000 divided by 15%. So we have 1 million pesos. 1 million pesos. So what is the agreed capital? 1 million. What is the total contributed capital? 750,000. So total contributed capital is less than now your total agreed capital. So 750 versus 1 million. How do we account for this? It will be treated as a goodwill or a revaluation. For this particular example, we treat it as a goodwill. So how do we account for this particular goodwill or revaluation? Any difference? So the difference is allocated to all partners using their profit or loss. Basta tandaan nyo, any difference, you allocate it using profit or loss to the all partners. So here, we account first for the investment, account for investment. So to account for your investment, then we just debit cash, and then we have your inventory and X capital. So 150 and 150,000. And then next, we account for the goodwill. So we debit goodwill. What's the difference again? 750 versus 1 million. So we have 250,000. And then we give that to your old partners A, B, and C using their profit or loss ratio. So 20% of 250,000, we have 50,000. And then 30%, 250,000 times 30%, 75. And for C, 125,000. For C, 125,000. So ganyan siya. So goodwill of 250, A, B, and C, A 50, B 75, and C 125,000. Okay, so here we account for the difference between the total contributed capital and your total agreed capital as goodwill. A while back, we accounted for it as a withdrawal. Okay, guys? So here, it's either goodwill or revaluation. Pag goodwill, you will recognize goodwill. Pag revaluation, you will increase a certain asset. So for example, land. So ang gagamitin mo naman dito ay land. Okay? So pag sinabi ng problem, goodwill, o di goodwill yan. Pagka revaluation, sasabihin naman kung anong type of asset yung i-increase nyo. Kung sinabing land, edi ang i-debit mo naman dito land. Ang importante sa akin, dapat alam ninyo mag-compute ng total agreed capital para alam ninyo yung difference niya. Okay? So, let's summarize your admission of a partner. So your admission of a partner, again, can either be by purchase of interest. Okay, so your admission can either be by purchase of interest or by investment. So if that is by purchase of interest, then you just record the transfer of capital. If that is a buy investment, you look whether the contributed capital is not equal to your agreed capital, or contributed capital is equal to agreed capital. If contributed capital is equal to your agreed capital, then what do we do here? Just account for the investment. Dito take note, this is a transfer of capital. This one is an investment. Now, what if by investment and the contributed capital is not equal to your agreed capital? So it's either your total contributed capital is equal to your total agreed capital, or total contributed capital is not equal to your total agreed capital. If your total contributed capital is equal to your total agreed capital, then we treat this one as a bonus. So what is this bonus? It's either bonus to or bonus from. If that is a bonus to increase to the new partner and a decrease to the old partner. If that is a bonus from, decrease from the new partner and increase on the old partner. So how do we increase or decrease the old partner using their profit or loss ratio? Now, if that is a total contributed capital is not equal to your total agreed capital, we look whether your total contributed capital is greater than your total agreed capital, or total contributed capital is lesser than your total agreed capital. If this is greater, you need to withdraw. If this is lesser, how do we account for it? We account for it as a goodwill, or the difference is treated as a goodwill or a revaluation. Okay? So for your admission, it's either purchase of interest or by investment. So those are the rules. Just take note whether the contributed capital is equal to your agreed capital, or your contributed capital is not equal to your agreed capital. Okay? Next, we go now to your withdrawal, retirement, or death of a partner. So we go now to the second type of your partnership dissolution. That is your withdrawal, death, or retirement of a partner. Okay? Withdrawal, death, or retirement of a partner. So here, you will terminate, you will not terminate, but there will be a change of your partnership ownership because of the withdrawal, death, or retirement of a partner. So here it is either, there are again two instances. It's either it is purchased by the remaining partners, or purchased by the partnership. So again, it is either a transaction between the old partner and the new old partner and the other partners, and you're purchased by partnership by the partner and the partnership. So how do we account for a purchase by the remaining partners? If this is a purchase by the remaining partners, again, this is a transaction by the remaining partners, and the withdrawing, retiring, or the dead partner. While if that is a purchase by the partnership, it is between the partnership and the withdrawing, retiring, or dead partner. So if that is a purchase by the remaining partners, it is treated as a transfer of capital. Take note again, there will be no change in the total capital here. Okay, there is no change in total capital, while here there will be a decrease in capital because it is already purchased by the partnership. So since there is a decrease in capital, what happened? The withdrawing, retiring, or the dead partner, capital will be removed. Okay, so let's first start with your purchase by the remaining partners. So A, B, and C are partners with capital balance of 100,000, 200,000, and 300,000 respectively. C is to retire and A will purchase his capital interest for 500,000 pesos. So this is again purchase of interest by the remaining partners. So here C will retire and A will purchase. Take note, this will be only accounted as transfer of capital. So what do? We remove C capital and we transfer it to A capital in the amount of 300,000 pesos. Ganun lang siya. Again, the purchase price is ignored because this is a personal transaction. It is a personal transaction and it does not affect the partnership. So it is the same with your purchase of investment or purchase of interest on your admission of a new partner. So admission by purchase of interest. So halos pareho sila. Dito nga lang kasi matatanggal na yung isang partner talaga. Walang new partner but magdi-decrease ng partner. So this is retirement, withdrawal, or debt. Purchase of interest by the remaining partners. How about if that is a purchase of interest by the partnership? Okay. So if ever that is a purchase of interest by the partnership, we compare the capital interest of the withdrawing, retiring, or dead partner versus the settlement price. So what is the settlement price? This is the price in which the partnership purchase the interest. Okay. So the problem here is if ever the capital interest is equal to your settlement price or your capital interest is not equal to your settlement price. So if that is a capital interest equal to settlement price, there is no problem. No problem. It is only treated as a payment of capital. If the capital interest is not equal to your settlement price, we have two instances. It's either capital interest is greater than the settlement price or the capital interest is lesser than your settlement price. If that is a capital interest greater than your settlement price, whatever is the difference, it is treated as a bonus to remaining partners. If the capital interest is lesser than your settlement price, it's either a bonus to retiring partner or bonus to withdrawing, retiring, or dead partner, or it is considered a goodwill, or it is considered as a goodwill. So, ayon yung mga instances, it's either first, capital interest is equal to settlement price, or capital interest is greater than the settlement price, or the capital interest is lesser than the settlement price. So, A, B, and C are partners with capital balances of 100,000, 200,000, 300,000 respectively. C is to retire in the partnership, and the partnership will settle its interest. So here it is the partnership who will purchase the interest of C. Case 1 for 300,000 pesos. So what is the capital interest? 300,000. What is the settlement price? 300,000 kasi nga yun yung amount ng ating settlement, 300,000. So what will happen? It will be treated only as the payment of the interest. So tatanggalin mo si C capital and then you will credit cash 300,000. Ganon. Okay? So for 300,000. Case 2. Okay? Case 2. For 250,000. So what happens here? Capital interest is equal to 300,000 kasi nga C is 300,000. And then what is the settlement price? So the settlement price is only 250,000. So greater. How do we treat this one again? It is treated as a bonus to remaining partners. So how do we share it to your remaining partners? Using their remaining profit or loss. So assuming A, they share profit or loss of 20, 30, and 50%. So we remove C capital for 300,000. We pay him only 250,000 and we have here bonus to A capital and B capital. So magkano yung bonus nila? 300 versus 250, 50,000 bonus. So how do we share that? 50,000, 50,000. Using the remaining profit or loss. So what is the remaining profit or loss of A? 20%. For B, 30%. But take note kasi dalawa na lang silang natira. Si A, 20. Si B, 30. So kukunin mo yung ratio niyan. So 20 over 50 and 30 over 50. Ganun yung gagawin natin. Okay? So dalawa na lang kasi silang natira dito, si A at saka B. Kung ito total mo yung interest nila, hindi na mag-100%. So kukunin mo na lang yung ratio nila, 20 over 50 and 30 over 50. So how much yung share ni A? 20,000. Si B, 30,000. So again, ayan guys, if ever the capital interest is lesser than the settlement price. Okay? So it is a bonus to remaining partners. Next, we have your capital interest is lesser than your settlement price. Capital interest is lesser than your settlement price. Okay, so let's just copy this. So A, B, and C are partners with capital balances of 100, 200, 300,000 respectively. C is to retire in the partnership and the partnership will settle its interest. So case 3, for let's say 350, no, for 400,000 pesos. So what is the capital interest of C? Only 300,000. Settlement price is 400,000. So capital interest is lesser. So we have here 100,000. So you treat this one first as a bonus. If this is treated as a bonus, again, it will be shared. So we have here C capital, 300,000. Tama? Tapos, magkano yung cash na ibibigay mo kay C? 400,000. So, paano natin account yung difference sa 100? Pag-sharean ni A at saka ni B. Paano nila i-share yan? Using their profit or loss ratio. So what is the ratio? 20%, 30%. Since that is less than 100 already, so i-divide mo siya dun sa total niya. Multiply nyo dun sa difference na 100,000. Magkano yung share ni A? 40,000. Ni B? 60,000. Okay? So pagka tinanong kayo, what is the capital after? So what is the capital before? We have A, B, and C. 100, 200, and 300. Tapos, meron tayong withdrawal dito. Tanggalin mo yung 300,000 kay C. Kay A, 40, kay B, 60. So what is the balance? 0 kay C, kay B, 200,000, kay A, 60,000. Hindi. Kay B, 200 less 60, 140,000. Okay? So, ganun siya. Dito, bonus kasi. So, kanina, bonus from. Ito naman, bonus to. Ito yung bonus from. This is considered as a bonus from. This is considered as a bonus to. Okay? And then the last, it is treated as a goodwill. It is treated as a goodwill. So let's just copy our problem. So for 400,000 treated as a goodwill. So ibig sabihin, may 400,000 siya. So first, we look whether the goodwill is attributable only to the partner or it is attributable to the all partners. So here, first you compare the capital interest and the settlement price. 400 capital interest is 300,000. Settlement price is 400,000. So we have here 100,000. This should be the amount of goodwill. So if ever that is only goodwill to retiring partner or withdrawing partner or dead partner, then what you will do is you debit goodwill, yung 100,000, and then C capital, 100,000. Tapos bayaran mo na CC. C capital, magkano yon? 400 na. Bakit 400, sir? Before kasi 300,000 plus yung 100,000 na goodwill. Tapos, credit cash, 400,000. Ganun. So, goodwill, 100,000. C capital, 100,000. Because it is only for your retiring or withdrawing or dead partner. Now, what if it is goodwill to all partners? So, pag na ganyan, you compute for the goodwill to retiring or withdrawing or dead partner, which is 100,000. You divide it to the interest of retiring, withdrawing, or dead partner. That is 50%. So, this is the total goodwill. So, 100,000 divided by 50% is 200,000. 200,000. So this total goodwill will now be shared by the partners. So goodwill tayo, how much? 200,000. A, B, and C. So what's the share of A again? 20%, B, 30%, C, 50%. Times 200,000. So here for A, we have 40, for B, 60, for C, 100,000. And then we will now record, guys, the payment to C. So C capital, and then cash, 400,000. Paano uli nakuha yung 400,000? Yung 300,000 plus yung goodwill na 100,000. So, tignan nyo yung difference ng goodwill to retiring partner only. If that is yung goodwill to retiring partner, kung magkano na yung na-compute nyo, yun na siya. Dito kasi, compute natin, i-divide nyo dun sa interest, yun yung total goodwill. Okay? So, nagko-compute tayo ng total goodwill dito. Unlike dun sa kanina, wala na. Kung ano yun na lang agad yun. Yun na yung goodwill. Dito, magko-compute tayo ng total goodwill and then we will share it using the profit or loss. Okay? So, let's recap our withdrawal, debt, or retirement. So if that is a withdrawal, debt, or retirement, take note, it can either be a purchase of interest by the partner or by the partnership. If that is a purchase of interest by the partner, what will happen only is the transfer of capital. If by the partnership, you look versus the capital interest and the settlement price. If it's equal, it is only a payment of capital. You just record the payment of capital. If it's not equal, then you look whether it is greater or lesser. If the capital interest is greater than the settlement price, take note, it will be a bonus to your remaining partners. But if the capital interest is lesser than your settlement price, it is treated as a bonus to your withdrawing, retiring, or dead partner, or a goodwill. And if that is a goodwill, take note, guys, that we are either to compute a goodwill attributable to the retiring, withdrawing, or dead partner, or a goodwill attributable to all partners. So mag-ingat kayo dun sa problem. So normally, ang tanong lang naman dito, what is the capital balance of the partners after you affect the dissolution. And I already taught you how to compute, di ba? Nagko-compute tayo kanina kung ano yung capital balance nila. Ayan, ganyan. How to compute for the capital balance. You either add or deduct whatever is the changes because of the dissolution. And if ever you're asked what is the settlement price, alam nyo naman na. What is the investment, alam nyo na rin naman yan. So, may bago kayong natutunan today. It is the goodwill. Before kasi natutunan na natin yung bonus. Ang bago ngayon is goodwill. So how do we compute for your goodwill? And as to the computation of your total contributed capital, alam na natin yan. Total agreed capital, naturo naman kanina. So again, the problems will revolve here as to how do we compute for the amount, or how do we compute for the amount of our settlement price, our capital interest, and also how do we compute for the, what do you call this one? For the ending capital balances of the partners. Okay? So that's it for this particular session. Thank you.